With all our indices finishing negative on the week, I'll explain what to expect in next week's tape. But before we get into that, there is the closing bell, guys, with the S&Ps finishing the day down about 3 points. We're hanging in there after a brutal day from yesterday's session. We can see the Russell today is up 0.75%. The Nasdaq right behind it about 0.5%. However, we see the Dow in the red down 0.75%, as well as the S&Ps just slightly in the red. Now, when we take a look at the S&P futures, we can see we're down 5 points. We're sitting at 3,900, which has been a fairly strong level for the most part. You see a range of about 48 points and a sizable wick. When we zoom in intraday, we saw some selling in the final 10 minutes of trade. However, on a year-to-date, we take a look at these S&Ps. They're up 5.7%, which isn't too bad about a quarter through the year. I'll come back to the S&P and discuss the SPX for next week's tape as soon as the options markets settle out. But let's take a look at the Nasdaq. And we see the Nasdaq is up just 1.3% on the year. So the Nasdaq is lagging the S&P 500. We just take a look at it from the daily. It's hanging in there. It had a brutal day yesterday, a sizable wick down. When we take a look at the expected move, next week the options market is pricing in our upper edge at around 13,119 and the lower edge at around 12,500. So those are going to be our ranges in the Nasdaq for next week. We'll see if we can lean to the upside after having a negative week across the board in all our indices. When we take a look at the Russell, today the Russell was up close to 1%. After getting whacked, we're seeing these small caps see some nice momentum on a year-to-date. The small caps are up over 17%. However, the Russell 2000 will be rebalancing come June. So a lot of these companies in the Russell now have outgrown the 2 billion threshold market cap, and they have some decent weight now, which they'll be moved up a class. And as for the Dow, we see the Dow heavily in the red. The Dow is up 8% on the year. Taking a look at it today, is the Dow about to roll over? We see the wick from yesterday, back-to-back red days. I don't know. If you ask me, the Dow could be leading the way. We saw selling right out the gates. However, the Dow is just a small sample size of 30 stocks. So we see our indices kind of mixed for the most part. Let's take a look under the hood and see what's going on in our sectors. And taking a look at our sectors, we see the software stocks today were up over 1%. They're leading the way. We see the big five right behind it up over 1%. However, healthcare up 0.36%. Consumer staples up 0.35%. We see energy in the red down 0.16. We see technology in the red down 0.3, but we see the big five up. I'll get to that in a second. Industrials down 0.75%. And we see the financials are worst performing, down over 1% on today's tape. Now, when we take a look at these on a year to date, we see software stocks up 6%. We see the big five up 3%. We see healthcare up almost 2%. Energy up over 30%, consumer staples down on the year 0.5%, tech up 1.3%, industrials up 11%, and financials up 17%. I want to hone in on the big five. The big five consists of Apple, Microsoft, Amazon, Google, and Facebook, which Facebook, Amazon, Microsoft, Google has some decent days today, and we're seeing them get a nice pop today. However, we've been consolidating for about 200 days for the most part. When this index wants to get going, we take a look at it. If this thing gets going 10%, it's going to be felt in the Nasdaq and the S&P because all these tickers are in both of our indexes. Now, this has been relatively a safe haven trade for the most part. It's all going to come down to what the bond market wants to do, because if the bonds keep sliding, it's going to hurt a lot of these growth stock names. So speaking of the bonds, let's take a look at them. And we take a look at these bonds. They're up 14 basis points, and they're just kind of sliding south. They can't find a floor to save their life. We take a look at it intraday. The bonds kind of sold off at the open and just went sideways from there. So when the bonds fall, that's going to increase the yield. So when we take a look at the TNX, it's sitting up 12 basis points at a 1.73% yield. We throw this on a weekly and just take a look at the TNX. It's showing no signs of slowing down, let alone consolidation. Can we get some consolidation here in the bonds? If we do, that can kind of calm the market down in terms of our sell-off in the growth names. However, if this just rips on open, it could open a lot of things up in the Nasdaq, and that could spread throughout the entire marketplace as people chase value name stocks. Now, when it comes to the volatility index, we take a look at these VIX futures. they're down about 3%. This is a fresh new contract. We take a look at it intraday. Saw it pop at the morning, however, sold off. We're seeing a little boost in the final minutes going into the weekend. As for the VVIX, down about 2.25%. It too seeing a nice little pop. However, it was trend down for the most part. Taking a look at this VVIX, it just seems to me this 115, 110 to 120 range is about the new norm. You can see we spent a lot of time here in the VVIX, even though when we look back on it, 5-year weekly, you can just see it spent a lot of time below 100. However, until we can actually get below 100, volatility is here to stay. So let's take a look at our SPX and see what the options market is pricing in for the S&P 500 in next week's tape. So we go over to the SPX and we take a look at the option chain. We look 7 days out because that's a week from today. We see the options market is pricing in a $76.72 move up or down. So let me draw these levels in and we'll discuss our barriers for the SPX in next week's tape. So we take a look at our next week's expected move in the SPX and we're expecting 76 points. This week was about 74. Next week is about 76, so relatively in line. The lower edge is going to play 38.36. So if we see selling next week, this 38.36 should play very strong support. We know that level is 12,500 around in the Nasdaq as well. So our midline is where we closed, 39.13, and 76 up. It's hard to see this number. It's going to be 3,989. So just 11 points shy of 4K. If we were to get up to this level, I would say we might as well just go to 4K at that point. However, seeing the last 3 trading sessions have been down, finishing negative this week. We'll see if we can turn it around now that the Fed has spoken and now that stimulus checks are being passed out. Maybe we can see a rebound in next week's tape, but for the most part, keep your eyes out for these levels. 39.89 and 38.36. So we see what's going on in equities and bonds and volatility, what's going on in our dollar and our commodities. And taking a look at the dollar index, it's up 9 basis points, sitting at 91.94. For the most part, we see the dollar kind of consolidating close to this 92 level. Dollar has been strengthening due to the increase in bond yield. Despite all the monetary expansion through fiscal stimulus, the dollar is not selling off. So what does that mean for our commodities? Well, we take a look at crude oil, and crude oil today was up 2.38%. Some nice volume coming in it from yesterday as well. But what do you expect? After falling over 8%, we're seeing a little dead cat bounce up 2.3%, which it didn't really help our XLE today, which was flat on the day. This could be a trade we'll have to watch in the coming days, but this is going to test the crude oil market. And as for gold, we take a look at the gold futures up 0.5% today, 9 points, sitting at 1741. Nothing going on here in the precious metals. And then there's Bitcoin. We take a look at Bitcoin up 3.26%. Bitcoin is consolidating in the high 50,000s and it's looking very strong heading into the weekend. We're seeing a nice boost. Take a look at it on an intraday into the final minutes of close. However, Bitcoin trades over the weekend, so it doesn't matter what these futures are doing today because we'll have trade on tomorrow and Sunday. And look for tomorrow for me to update you guys on my Bitcoin charts because I haven't posted a Bitcoin chart video in a while, but I'll explain it more in depth in tomorrow's video. But for the most part, let's hold 55,000 over the weekend. That would be a great sign for Bitcoin. There you have it for the stock market breakdown. So next week, we're expecting about 76 points. We're not expecting much of a move. However, the indices across the board finished negative on the week, with the Russell taking it the most, down over 2%. We'll see if we can see a bounce back as more stimulus checks are being passed out. Will retail be enough to get this market to turn? Will the bonds keep on going? We'll have to see what the bond market wants to do. But ultimately, if the bonds can cool off a bit, I think these tech names, Apple, Amazon, Microsoft, Google, Facebook, can get going. And that's the key that this market needs to get higher. Other than that, guys, if you've enjoyed the video, hit the thumbs up. It means a lot when you guys show some support. Any comments or questions for me, leave it down below. I'd love to hear from you guys. And on that note, guys, I will see you in the next one. Look for my Bitcoin video tomorrow. Other than that, take care, guys. Have a safe weekend. I'll see you next week. Peace!